So, risk assessment procedures. Remember, you will do these at the planning stage. Really important when we come to do planning, do the risk assessments. We want to identify risk, and we're trying to identify audit risk, and that's the risk of giving the wrong opinion. And why would we give the wrong opinion? Because we would miss the risk of missing material misstatements where the management might have put things in wrong. So we need to focus on where we think they would put things wrong. So how would we know where this risk of material misstatement is? Well, as it says here, we need to understand the client to understand their risks, and internal controls as well, because if the internal controls aren't working, they're going to make mistakes, okay? So we've got to understand the client and understand their internal controls. Other things we need to do, we need to talk to management, ask them, what's been going on this year? Do you have new systems? Do you have new products? Where could there be? Do you have new suppliers? Do you have a new credit policy? Where could there be risks? Why would a new credit policy be a risk? Because you might be offering more credit and therefore there's more risk of bad debts. Have you put the extra bad debts in? Do some analytical procedures. Have to do that at planning stage. If in year 1 sales are 100, and in year 2 you're happy that sales have doubled, then cost of sales, if they were 20 in year 1 and they're 50 in year 2, you'd think, there's something strange because they should be 40. It might be a perfectly valid reason, but you would then go and focus on that 50. So analytical procedures like that are absolutely vital to try and point out where you think there may be mistakes. You want to know about the internal controls, so let's watch staff using the internal controls. Are they working? Let's look at what went wrong last year, because if it went wrong last year, there's a higher probability of it going wrong this year, so review the prior year's papers. What else then? Well, we've got to get to know the industry, get to know the client, get to know the industry that they're in. Are they looking to grow super rapidly, the client's overall strategy? If they are, again, we would expect revenue to go up, we would expect lots of stock, lots of debtors, and so again, are we overvaluing stock, are we overvaluing debtors? Understand the client's accounting policies. Have they changed? Because if they have changed, they should change last year's as well. Understand the client's industry's regulations, because have they complied with it all? If they haven't complied, then we might have to put a potential fine in for non-compliance. Okay, obviously learn about what the client actually does. If you think of my offline business, I kind of receive money every time after an exam, because then people are booking on their new courses. So if I got revenue during the exam time and I got a big lot of revenue, well, that would look strange, and so you'd go and see maybe I've got something wrong there, okay? So we said also have a look at the internal controls. So this is what this is saying here. Have a look at the design of the internal controls. Make sure they're working. Make sure they're good. How do we do it? By looking at their control environment. There's actually 5 things there, but that'll be for another class at some stage. Have a look at the client's risk assessment process. We're doing a risk assessment process. Have a look at theirs. How do they identify risks? What risks have they identified? Have a look at their information system and have a look how they monitor their internal controls to make sure that things aren't going wrong. So there you go, that's a risk assessment procedures recap. They're the sort of things that you've got to be able to do in the exam. But honestly, the key to passing these exams now is go and do questions, because when you do questions, you'll notice that the same risks pop up time and time and time again. So it's vital that you just do questions now. Now that you understand a bit more the risk assessment procedures.